What is the fractal indicator? The fractal indicator is a trading indicator used in technical analysis that's used to identify potential trend reversal points in a market. It was developed by a renowned trader, Bill Williams, and therefore is also referred to as the Williams. An alternate way to understand the fractal pattern is a bearish fractal pattern, which indicates a market reversal to the downside, forms when each of three successive candlesticks shows price attaining a higher high, followed by two candlesticks showing price action with a lower high than the high of the preceding candlestick. A bullish fractal pattern, which indicates a market reversal to the upside, forms when each of three successive candlesticks show price moving to a lower low, followed by two candlesticks showing price action with a higher low than the low of the preceding candlestick. Interpreting and using the fractal pattern. The fractal pattern reveals a V or U-shaped bottom or top forming in a market, although the pattern is rarely as perfectly clean and symmetrical as the one shown in the image above. Such a pattern of price action may indicate a market reversal, either a previous uptrending market gradually turning over to the downside or a previous downtrending market turning to the upside. At a minimum, a fractal pattern is interpreted as identifying at least a temporary level of price support, bullish fractal, or price resistance, bearish fractal. Traders frequently view a fractal pattern in relation to other technical support resistance indicators, such as daily pivot points, in order to evaluate the strength or probable reliability of the fractal indicator's signal of a trend reversal. For example, if the high point of a bearish fractal pattern coincides with a Fibonacci retracement level or moving average level that also identifies that price point as a resistance level, then the fractal indicator would be interpreted as being more reliable, more likely to be an accurate indicator of a market reversal. Fractal indicator caution. The fractal pattern must be confirmed by the close of the fifth candlestick in the pattern. In other words, you need to wait through the close of the fifth candlestick in the pattern in order to see if, in fact, a valid fractal pattern has formed. However, the failure of a fractal indicator to fully form may itself be an indicator of a probable future price movement. For example, assume that 4 of the 5 candlesticks showing a bearish fractal pattern have formed, but then the price action represented by the 5th candlestick, rather than showing a lower low than the 4th candlestick, instead shows price advancing to a new high, even well above the high of the 3rd candlestick in the forming pattern. Such price action would not only void the formation of a bearish fractal pattern, it would, in fact, be an indication that the existing uptrend will continue and that price will continue advancing to higher levels. Indicator advantages and disadvantages. The fractal indicator offers the advantages of providing traders with easily identifiable market entry points at the close of the fifth candlestick in the pattern, and with equally easy to spot price points for stop-loss orders. With a bearish fractal pattern, a trader sells short and then might place a stop-loss order just above the highest high attained in the fractal pattern. How to avoid false signals from fractals. Fractals can generate misleading signals, especially during choppy or sideways markets, so using them with proper filters is essential. One of the best ways to avoid false signals is to trade fractals only in the direction of the main trend. For example, take bullish fractals in an uptrend and bearish fractals in a downtrend. Adding a moving average, such as a 20 or 50 period MA, helps confirm whether the fractal aligns with market momentum. Traders should also wait for the fractal to fully confirm after the fifth candle closes instead of anticipating the pattern. Combining fractals with other tools like support resistance levels or volume spikes further reduces noise and improves signal quality. Time frames best suited for fractals. Fractals work across all time frames, but they are most reliable on higher time frames, where market noise is naturally lower. Charts like the 1-hour, 4-hour, daily, and weekly provide cleaner swing points and fewer false patterns compared to fast, volatile time frames like 1-minute or 5-minute charts. Intraday traders can still use fractals effectively on 15-minute or 30-minute charts, but should combine them with trend filters for better accuracy. In general, the higher the time frame, the stronger and more meaningful the fractal signal tends to be. How to trade using the fractal indicator. You can use the fractal indicator to trade the breakouts. Always combine the fractals with the trend and try to avoid trading in choppy markets. Trading bullish fractal. Enter a long position when the price breaks above the most recent bullish fractal. Place a stop loss slightly below the last bullish fractal. Book the profits at the next resistance level or using a risk-reward ratio. Trading bearish fractal. Enter a short position when the price breaks below the most recent bearish fractal. Place a stop loss slightly above the last bearish fractal. Take profit at the next support level. Fractal patterns in technical analysis. In trading, fractal patterns are used to identify potential reversal points in the market based on the theory that markets move in predictable patterns that repeat over time. These patterns can be observed in the price charts of equities and other financial securities. Here are some ways fractal patterns are used in trading. Basic fractal pattern. The most fundamental fractal pattern consists of a series of 5 bars or candlesticks, with the middle one being the highest in a bearish fractal or the lowest in a bullish fractal, and flanked by 2 lower highs in a bearish fractal or 2 higher lows in a bullish fractal. This pattern suggests a potential for price reversal when market sentiment may shift from bullish to bearish or vice versa. The alligator indicator. This uses fractal geometry to help traders identify the start of a trend. It consists of 3 smoothed moving averages that help to spot trend formation and direction. Fractal breakouts. This pattern occurs when the price action breaks through the high or low of a previously identified fractal. Traders often use this to see if a trend is continuing or not. Complex fractal patterns. Beyond the basic fractal structures, traders and analysts sometimes identify more complicated patterns that incorporate fractals as part of larger chart formations, such as Elliott wave patterns, based on the view that price charts have repeated waves, or Fibonacci retracements, classic ratios used to see the limits of waves and other patterns. These patterns rely on the fractal nature of markets to predict price movements within larger trends.